Welcome back. A research analyst at the financial derivatives company, Bolanle Agbaje, joins us now to discuss this morning's burning economic issues at the domestic commodities markets. Good morning, Bolanle. Thank you for joining us on the program.
Thank you for having me.
All right, let's just take it up from our last conversation. Now, of course, I believe you heard Mr. Balazaka, but then let me get your own thoughts about the federal government's Autogas initiative.
Yes, I think it's an initiative that is better than nothing. I'm sure they've, come up with this initiative based on what oil prices are trading at and the fact that, we're seeing pump price increase significantly. And like I mentioned before on Tuesday, we did talk about the fact that there was literally nothing the government can do because the pump price would definitely be reflective of what global prices are. But I do understand where the previous analyst was coming from, the fact that there's no nitty-gritty on, how the government is going to take up this initiative, and also the fact that it's only going to affect only a very insignificant part of the population. And obviously, he talks about the fact that power, which is our main, driver of economic growth and activity, hasn't really been, tackled. We've seen gas constraint of more than 1,000 megawatts so far, and that has to do with, the fact that gas is not, significantly contributing to power generation. So it's conflicting on how, we would get Autogas get cars that are converted to Autogas when we're seeing significant gas constraints when it comes to power generation.
Perhaps we'll see more clarity or get more clarity in the coming days as time goes on. Now, let's talk about oil prices now. Of course, we touched on, but it seems to be getting some support from the UK's licensing of the Pfizer-BioNTech vaccine, of course. But before then, you know that the market had been quite volatile. Of course, that's ahead of the OPEC Plus meeting today. So how do we put all of this together?
So just looking at the backstory, in April this year, we had seen that, OPEC deepened their cuts by about 9.7 million barrels per day. And that was based on, after six months after that, they will decide on whether to further deepen cuts or start to ease out, the output cuts that they had initially agreed on. So I do understand where they're coming from. On one hand, you have countries like Nigeria and Iraq that are struggling with oil revenue, anti-governmental protests, and also the fact that, they're not able to cover their expenses. They have their budget deficits increasing significantly. And then you also have other countries that can obviously withstand, the further cuts and more concentrated on whether, oil prices will keep increasing further. But when you look at both sides, there are still huge risks. If OPEC decides to deepen its cuts, then what this will mean is obviously prices increase significantly, but at the expense of, Nigeria and Iraq most likely, not complying with this particular cut. And what that happens, what would further happen with that is the fact that oil prices would not trade as high as we expect. And on the other hand, if, OPEC decides to not deepen its cuts and, start easing out this increasing production gradually, then there's a risk of offsetting the initial gains that we had seen so far. So I'm sure it's a lot to take and chew. And OPEC, they're meeting today and trying to decide, on what to do further.
And see which one would actually benefit Nigeria at the end of the day.
Exactly.
All right, let's talk about the naira now. It's been appreciating at the parallel markets. It currently stands at about 485 to the dollar. Is this tied to the CBN's grant of unlimited access to forex remittances?
Yes, the CBN obviously would not just sit back and watch the naira, get to as high as 500 naira to the dollar. They're obviously working tirelessly to make sure that the exchange rate is reflective of what benefits the economy. And yes, so the increasing of because the further depreciation of the exchange rate had to do with the low supply in the market. So they're looking for ways to increase supply. So that initiative supports, that. And also the fact that they've created an initiative, they released a statement yesterday, a circular yesterday about, trying to manage liquidity as well, to further signal tightening of interest rates due to the fact that, we've seen inflation hit rocket high levels. And they're looking for ways to, you know, make sure that the liquidity in the system is not, you know, offsetting, you know, the gains that they're trying to make with economic activity.
And so how is this in any way going to affect our reserves?
Well, it's definitely going to eat into our reserves, but I'm sure they're hopeful that oil prices will keep climbing, and obviously other sources of our exchange rate, our external reserves as well. The fact that, you know, diaspora remittances as well. That's why, you know, the fact that they've signaled the unlimited access to the remittance, they're probably positive that, you know, there's going to be increased remittance flow within the economy.
All right, now you touched on this a bit, and that's talking about the CBN circular on Tuesday about securitizing CRR refunds. What would be the implications of this?
Well, it wouldn't necessarily. Well, we do expect that it would affect inflation rate, but not so soon. Why? Because inflation, what's driving inflation rate this high has to be structural. But regarding, you know, curbing liquidity and, you know, making sure that the demand or the increasing demand for dollar inflow or dollars has reduced significantly, that would definitely play into, you know, the fact that they've securitized. So what's the explanation of what this securitization of the CRR refund is the fact that, you know, as soon as 27.5% is the amount that you give the CBN, and when they refund that back, it's usually refunded in cash. So what they do now is they're trying to make sure that they're deepening the the exchange rate market, in the sense that they do not, you know, they wouldn't refund it as cash. They would more or less refund it as instruments that would, you know, be managed by each individual within the economy.
So where does the stock market stand in all of this? Does this mean that the glorious days may begin to fizzle due to possible higher interest rates?
Well, yes, because, you know, there'll be other assets that, you know, would be more attractive when interest rates are high. We do expect that the stock markets wouldn't be trading, you know, as high as it has been so far. And we're definitely going to be seeing some decline within the stock market space.
And I'm not sure that investors and the stock market may not be too happy about this. I mean,
well, you know, with the increase in interest rates, it's definitely going to attract some investors. We do expect that, you know, some foreign investors would see these high interest rates as something they can, you know, profit from. And I'm sure that's what the CBN is looking at, and trying to monitor the dollar inflow through that as well.
All right, now let's talk about the World Bank Board now set to meet next week on Nigeria's $750 million power support loan. Well, of course, we know that this loan was approved in June or thereabouts, but what are your expectations?
We do expect that, you know, when they do come to meet, they're probably going to, you know, discuss on how this loan will be channeled through the power sector. The fact that, like I mentioned, power is a major issue, and it shouldn't be in this day and age. Like most developed countries don't have to struggle with, you know, power generation, and it's the frontier of economic activity. Once you have power, then it reduces costs in different angles. So it's a great initiative, and we do expect positive outcomes. Not necessarily in the near term, just because investment in power is usually structural, and it takes a long time before, you know, you can actually feel the effects on the power generation.
All right, now let's talk about the price of commodities. Now, you guys are saying that the price of flour is to increase again in the next 2 weeks. What exactly is going on? The prices keep... You know,
yes, like I mentioned, supply has been having a significant impact on, you know, commodity prices recently. We've not seen any changes to demand specifically, but some of these companies are struggling to meet, you know, with increasing cost and all that. And I'm sure a lot of, well, particularly with flour, some of the producing companies have tried to make sure that, you know, they incorporate whatever the higher costs that they can, which they had done so far. But I think at this point, they're trying to offset, you know, the increasing costs by increasing prices of flour.
And this, in turn, would affect, you know, some byproducts such as bread, for instance.
Yes,
exactly,
yeah.
Which is a common staple. So how do the people intend to cope with this increase in prices?
I guess in the short term, prices would be, like bread, a loaf of bread goes for about 400 naira as we speak. We do see, increases in price, not up to 500, for example, but we do expect that prices would increase in the short term. But say Q2 2021, Q3, we definitely should see prices taper down.
But there's a trend. I mean, usually around once the price goes up, it hardly ever comes down.
No, it definitely will. It takes some time, but it will. Just because what had driven prices this high had to do with the COVID and then the lockdowns and all of that. But now that we're seeing vaccines roll out, everything is whatever is going on in the economy is now shining bright, or there's hope within the economy. So we do expect that, the commodity prices should taper down as soon as, well, as early as Q2 next year.
All right, now, well, of course, we're still talking about commodity prices, but as we speak today, where are we in terms of prices? Have there been any, rise in prices during Tuesday when you were here and today?
Well, no, not significant rise in prices, just because, we are not seeing any increase in demand. Normally, if we had seen further increases in demand of some of these staples, then there will definitely be a significant rise in the prices of these commodities, but we're not seeing any of that now, just because disposable incomes are not, increasing the way they should have during the month of December. December doesn't really feel like Christmas yet. People are not spending as much as they did last year. And so prices have more or less remained stable, but high.
Stable but high.
Yes.
And in the coming days, the festive period is already just a matter of weeks away.
It's round the corner. Normally, the trend is during this time, you should see, increasing demand, people around shopping, buying gifts for their family members and all of that. But we're not seeing that this year. And coupled with that is the fact that nobody wants to, contract the virus. So most people are not having any get-together or whatever like they would normally do in previous years.
But do you foresee any last-minute rush, perhaps, maybe, just about that time, maybe?
Not really, no. We're already in the first week of December. Usually the rush comes in sometime in November. And now we're in December, there's no rush. You can't even feel it in the atmosphere. It's not just happening. People don't have the money.
And
everyone is
exactly.
just
I was just going to say that tells you a lot about the purchasing power.
Yes, the purchasing power is quite low at the moment. We're not even seeing, family members come back for holidays. None of that is happening. Everybody's just going by their business, working to make sure that, they can save for the future. I think it's a saving culture as we speak.
All right, so just before you go, I'd like to ask again, what will possibly be your outlook for oil prices in the coming days, and then agricultural commodities as well?
Well, with oil prices, it's still bleak because the fact that the meeting has gone on for this long, we're not too sure which direction it's going to go. But in the short term, we do expect oil prices to trade at about $48 to $50 per barrel, just because, the UK has mentioned the fact that, they're moving ahead with the vaccines, or the use of the vaccines from next week. That's positive news. And even the stock markets around the world are reacting to that. So when it comes to agri-commodities are, moved or are channeled based on the improvements in China. Wheat, corn, they've shown mixed signals, but what's driving them is more or less the supply and demand factors. We're seeing increasing demand for the price for wheat and corn, which should, boost prices. With cocoa, the fight between the chocolate processors and cocoa producers is still ongoing, but as a result, we should see increases in prices of cocoa. And then with sugar, we're seeing increasing supply in Brazil, and that, would more or less reduce prices of sugar in the near term.
But then, once again, talking about the federal government's Autogas initiative, do you see this having any impact in prices in the coming days? Is it possible?
No, not necessarily, no. It's a longer-term initiative. The signal, yes, might affect, prices. Most people would be more positive on, the outlook of the economy, but I don't see it making a lasting impact on, prices in the short term anyways, short to medium term.
All right, Bolanle Agbaje, research analyst at the FDC. Thank you once again for your time on the program.